Welcome to Friday's Market Wrap-Up here at T3 Live. Matthew Buckley, the Chief Options Strategist, and the futures in the green with a surprise announcement out of the Bank of China. Surprise Chinese rate cut, 25 basis points, the deposit rate, and the lending rate by 40, and also allowing banks to offer interest rates of 1.2 times the benchmark rate. But pretty unbelievable. And this comes on the heels of the other night. We had Wednesday night at 8:45, obviously Eastern. We had the Chinese HSBC flash manufacturing PMI, which was a little bit of a miss. 50.4 last time. 50.2 forecast. We are right there at 50, which is a critical level. Anything below 50 indicates a contraction in the economy, more or less, and anything obviously above 50 indicates industry expansion. So we are teetering on the brink there of potential badness. But again, in today's world, we're in bizarro market. Good news is good news. Bad news is good news, and awful news is great news. So here comes another central bank riding to the rescue with, quote, unconventional measures. So very, very interesting to see the move out of China. It's not good news because it tells us that the PBOC is worried about the Chinese economy, but we will take it, right? We'll take the liquidity. We'll take the bad news as good news. Oil's getting up near $80, finally getting off the mat. Told my traders that this was going to happen. When this can't happen for too long. When the price gets to the point, OPEC folks, trust me, I spent a lot of time in the Middle East, and they might all stand together and do photo ops and shake each other's hands, but when they go back to their own country, they do whatever the hell they want to do. And they've been flooding the market here with oil. Well, guess what? It gets to a certain point where they have to go, all right, enough. Now we have to cut or ease. Just cut and throttle back on production to get the price back up, for all of us to start making some money. So, really interesting developments going on with the Chinese central bank, and news that OPEC is going to start cutting production here. So, but interesting week. We melt higher. Let's take a look at the S&P 500 for the week, and as predicted, there we go. You can't keep this market down. Doesn't matter if there was some relatively mixed macroeconomic data this week. It doesn't matter if geopolitical events aren't really doing that great, whether it's Ukraine or Ebola running around potentially. And there's the VIX for the week. That's interesting though. As we've melted up this week in the market, there's essentially a flat line on the VIX with that was kind of a fat finger. Somebody pushed a couple too many zeros on that one, but net the VIX is flat for the week. But again, folks, with the VIX around here, 13, 14-ish, that's cheap. Vol is incredibly cheap right now. Seeing a lot of upside call buying on the VIX out to January, February. A lot of down the road, forecast that volatility is going to spike, and that something bad eventually is going to happen. And it's funny because I was up on Wall Street for the past couple days. The biggest worry in a lot of trading firms is the fact that they have a lot of 27-year-old traders who've been at their firms for a couple years now, or 5 years, who've never seen bad, right? Since the financial tsunami hit in 2008, all these kids, sorry, I'm showing my age, all these men and women have seen or experienced is an up market. What's going to happen when the big one comes, so to speak, and these people go full freak mode? So going to be interesting. Had a good week in our weekly options model portfolio, and also just a lot of our portfolios in general. A lot of let's see how we did. A lot of our China positions. We have positions on China, Japan, Brazil. A lot of different long-term positions. Let's take a look. Where are we? Right there. So this is our primary live trade brief model portfolio, and looked pretty good for the week. We're really making some hay on a lot of our Apple trades. We have a lot of Apple bullish double verticals on. We've been closing some of those out recently so taking a loss this week on the EWJ, but Apple bunch of Apple positions on. Especially this bullish double vertical that we put on Monday morning out to January. That's already up $1,400. Let's take a look at the primary. I'm sorry, the accelerated retirement portfolio. Let's see how that did this week. I think we did pretty decent and looking good month to date as we get towards the end of the month here. So account performance, and let's see how we're doing month to date in our accelerated retirement. I think we're six grand. Very, very nice Apple positions in this accelerated retirement portfolio, up over 6 grand in this one. This is a bullish double vertical that actually expires today. The 103, 104, 106, 107, that one hit max profit, 100% gain in that one, $5,600 in a couple days. Couple weeks. We put that on about 3 weeks ago, so 6 grand in 3 weeks is pretty cool if you ask me. And then how did we do this week? Let's take a look at the weekly performance. Flat. Mainly on, again, EWJ. Obviously problems over there in Japan, so taking some hit on the EWJ. We should see our FXI positions. FXI is the Shanghai, and we should see some huge moves out of the Shanghai today with that surprise rate cut out of, pre-market. We're up to 39.80. Okay, so we're up a 31-cent move already in the FXI. So a lot of those, hopefully some of those reds from the week on China will turn around. So we had a good week, a lot of good stuff going on here at T3 Live. Hopefully you're on board a lot of our live training services, either on the stock side or the option side. Otherwise, you're missing out on some great training and hopefully some potential profits. Okay, so I will talk to you guys Monday. Have a great weekend. Happy hunting. Make sure you hedge, and I'll see you guys later.